Good evening, traders. It's Simon here with your weekly review of the dollar pairs. So last week we did expect this dollar to actually move up, and it has moved up quite significantly now, and we are at an interesting area here. But my problem lies with gold. So normally when the dollar goes up, the gold should decrease. That's the general idea of what normally happens. And if you look here now, we've got a nice double top pattern on gold, and we're breaking down. Now, for me personally, I like to buy gold at 13.50 here. It's just, we'll zoom out to the weekly chart, and you'll see why I like 13.50 so much. There's this key level here going across there. It's a beautiful level there, very, very significant. Now, my problem with this, if gold moves down, if it does generally mean that then the DXY will have to move up. Oh, there we go here. It means the DXY will have to move up. And now, if it moves up, does it mean we've got a bullish dollar? Not necessarily, no. I mean, we've got a double top pattern here. For us to make this bullish, we've got to break these highs here at the top. So, realistically, we could still have a bullish move on the dollar this week and still remain bearish for the medium term. So, I would suggest sitting on your hands and trading other pairs personally. And let me show you why I mean that. I mean, Aussie dollar, do you want to go long there right now? No, we got the downward sloping trend line and we're breaking down. However, on the intraday charts, you've got a little mini double bottom pattern happening there as well. So I wouldn't want to go long until after we break above this downward sloping trend line. Euro dollar is a very similar situation where realistically you're in the middle of nowhere going long now. There's no point going short. It's been short too long already, so as in it's gone into too many days short, so I wouldn't want to do nothing at the moment. If it comes down to 1.12 or 1.112, you're still bullish as such, because to become bearish it has to break this level here, and obviously this downward sloping trend line. So we just extend it a little bit to give an example. So that's the trend line there. We'd have to break down below this trend line as well to say we're bearish, and that means this would be a fake out. So that's something you have to bear in mind as well. Pound dollar, for me personally, the pound is still fairly weak. I don't like where it is right now, to be quite honest. I don't really see any trade long now. I did see a couple days ago on this candle here that you could say there's an inverse head and shoulder pattern forming, and even the volume was kind of what you'd expect, but unfortunately the dollar did break down further. It has made, some people are going to say a double bottom pattern here. I'm not going to say that. I just don't really see this key level as being so key. 1.26 is key, 1.24 is key, 1.25, I'm just going to plot that in to show you. There we are there. You haven't really got that much rejection. It's more of intraday rejection rather than daily time frame rejection, so I'm not really too bothered there. Kiwi dollar, well, you wouldn't go long here now, would you really? Right this very second in time. Maybe the Kiwi does get stronger. The Kiwi's been quite weak for the last week or so. It's had some weakness come into it. So again, you can come down to the bottom here and make a triple bottom and still be on the right side of the trade of being a bearish dollar. Again, would you go short there into the daily 50 MA? I wouldn't. So again, it's one of these trades I don't want to touch. US CAD, there was a good long trade here. If you took the trade, be honest, it's perfectly valid, but it never materialised. We broke down and come back up again. Would you want to go long for this key level? Hell no, you wouldn't. 1.31 is a key level going across there. You don't want to trade into that. So a break and retest on the daily chart would definitely be key to bring that long. In which case, at the moment, the Canadian dollar is quite strong in general. Dollar Swiss. Would you want to go short for this key level? No. You've got more scope to the upside. So again, it's one of these trades where they're all in the middle of nowhere, really. I don't like none of them. Dollar yen, would you go long there? No. Would you go short there after this big bullish engulfing candle? No, you won't go short either. I just don't like it at all. So this is the week where you can go for all the pairs and say you don't like nothing. The only thing I like in general is gold for short. That's not so bad. And the US dollar in general for going long, that's it. But there's no other pairs you can trade it with. So gold is really the only significant pair where you say double top pattern, weekly key level, it decelerated, it's breaking down. That's the only trade I like. But overall though, realistically with risk, I want this trade here. I want something like that. and then I can take this up to $1,800 or even higher. So that's what I'm looking for, something like this here. My stock be much tighter than that, my stock be something like that, to be quite honest, guys. But that's what I'm waiting for, a pullback down to this level here, and that is what I'm going to do this week, is sit on my hands, chill, relax, and see what happens. So guys, take it easy, don't rush into too many pairs. One little tip I will give you, you got Euro Aussie long. That's not such a bad trade at the moment, and neither is pound Aussie long. Both of them in general are quite good trades there. If you take them and lose these trades, they're not actually bad trades to take. So let's be quite honest, these are not too bad in the market. Little short-term trades, that's what I'll be looking for. And they're the trades I'll be taking for. I wouldn't be taking many dollar pairs this week. Okay guys, take care, and we'll speak to you soon.